Coinbase won approval for leveraged products, PayPal partners with Ledger and pauses crypto purchases in the UK, and I'm going to tell you what an $83 million mining Ponzi scheme did to the price of Filecoin. And to wrap up the news for this week, I compiled some of the most prominent topics being discussed on crypto Twitter, including the meme NFT project that pumped from $0 to 2 Ethereum. Welcome to Around the Blockchain, where we cover all of the latest crypto news that should be on your radar. Let's catch up on this week's events in the enticing world of cryptocurrency over Crypto Brunch. This week, Coinbase was approved to offer cryptocurrency derivatives on its exchange. According to traditional finance, this now means that US customers can trade Bitcoin and Ether with leverage. But you and I both know that anybody who wants to leverage trade is already doing it on other platforms. But this is still big news because Coinbase is the largest US exchange and it's a publicly traded company. For some reason, derivatives products have an easier time getting approval from regulators, which is interesting because it's got to be the riskiest way to interact with crypto projects outside of FOMOing your life savings into a meme coin. One interesting statistic is that 75% of crypto trades worldwide use derivatives. We already have stock market futures ETFs approved in the United States, and Michael Saylor says they aren't even tracking Bitcoin correctly, and they're not reflecting the true value of Bitcoin's price. Find out what the biggest names in cryptocurrency think about this and more by tuning into Around the Blockchain. Here, you will find real discussions with some of the biggest names in cryptocurrency, so make sure to click the like button and subscribe if you're not already. Turn on the bell to be notified when we go live too. Volatility Shares CIO Stuart Barton said that Coinbase offering futures and spot trading will close the price gap that Saylor is talking about. When money flows from one market to the other, it improves liquidity and arbitrage. Coin Fund President Christopher Perkins believes that this approval for Coinbase is a big deal because wider access to derivatives markets opens crypto up to more liquidity. He says that since in the past it was hard to find platforms to access crypto derivatives, it's actually prevented markets from taking off. So this could be bullish. FTX had already suggested this as a boost for crypto right before the high-flying exchange blew up and fell out of the sky. For some, leverage is a way to bet on the market, but for bigger investors placing counter bets with lower leverage, it's a way to hedge risk. And this Coinbase approval could unlock deeper pockets. Over the past several weeks, PayPal has made aggressive moves into crypto. Last week, we talked about how Maxine Waters is scared of such a big company issuing its own stablecoin. Welcome to the global economy, baby! PayPal has already started hitting roadblocks, having to pause crypto purchases for British customers temporarily. There are new regulatory requirements that PayPal has to comply with before crypto can be bought and sold on the company's platform. Crypto companies conducting business in the UK have until October 8th to comply with new Financial Conduct Authority's guidelines. Buying crypto with PayPal has come a long way already. In 2021, British customers could buy, sell, and hold digital assets, which were then custodied by PayPal itself. Last year, funds were finally allowed to be moved off of the PayPal platform and onto external wallets. Crypto regulations in the UK are more transparent than they are here in the United States, so hopefully they can make some adjustments to comply, and then get back to business as usual. Meanwhile, Ledger just announced fiat on-ramp capabilities using PayPal. US Ledger customers can buy Bitcoin, Ethereum, Bitcoin Cash, and Litecoin as easily as they can use PayPal to buy anything else on the internet, and they won't even be subject to any additional verification or KYC. Once purchased, the funds are sent directly to the Ledger hardware wallet. Here's an interesting story from this week. Filecoin miners were caught in an $83 million Ponzi scheme fraud, which caused the price to temporarily tank. This news doesn't have a huge impact on Filecoin itself, but it's a good opportunity to talk about mining and Filecoin. Filecoin is a storage project that has been widely seen as one to watch as we come closer to the next bull run. It was prominently featured in the Missouri report, and although the SEC tried to attack it earlier this year, and Jim Cramer tried to take it and other cryptocurrencies down by trash-talking and mispronouncing the name Philcoin on his show Mad Money, the Filecoin use case is undeniable. We need digital storage, and blockchain is a great way to do it. So here's what happened. The Space-Time Cloud Company, a Filecoin mining service, is in court over a pyramid scheme that made them $83 million in illicit funds. In September of 2018, Lai Muhang used WeChat to exaggerate the rewards that investors could make from the company's mining reward system. They got people to pay for membership fees to mine, buy equipment, and take out loans. The miners then went around like Arbonne pyramid scheme sales reps to get other miners on board, with members ranked based on how many people they were able to recruit. The news caused a one-day dip in the price of FIL, but it has recovered since then. There are some key takeaways here. One is that no country can close its doors on crypto, not even China. The other is that scams happen all of the time in crypto, so we have to be careful. And finally, watch out for news like this on a good project that hurts the sentiment and causes price to dip, but has no real effect on the project as a whole. Those who saw this dip yesterday were able to profit. Last week, we talked about everything that's been happening with DeGods. Season 3 was supposed to be mind-blowing, but the release did not match the hype according to most of NFT Twitter. Prices tanked and they keep dropping. Anybody who still believes in DeGods and believes in Frank and the team is looking for the bottom floor price for these digital assets. There are two possible reasons the floor price will dip even lower than it is right now. First, Blur airdrop farmer Machi now owns more than 300 DeGods. They are a mega whale holder that could dump at any time. The other is all of the underwater DeGods loans that were taken when the price was high. Just a few weeks ago, DeGods were priced starting at 7 ETH, and now they're fighting to stay above a 4 ETH floor. What else is trending on crypto Twitter this week? The Degen NFT project Sproto Gremlins hit 2 Ethereum after the success of all of the Harry Potter Sonic S coins. And yes, if you're just joining the late August haze of insane meme coin culture, that really is a thing. It all started with a Degen meme coin called HarryPotterObama10inu with the ticker Bitcoin. A funny name that got a lot of attention but not a ton of price pump when it first started. Recently though, a spin-off meme coin with the ticker XRP called HarryPotterObama10inu surged a couple %1,000% after Twitter influencers like Pinky and Coco bought it and shilled it hard, followed by the dev buying and burning millions of dollars in HPOS8i tokens. Everyone late to that party started pumping Sprotos, the HPSO spin-off NFT project, and even that is now starting to retrace. The Harry Potter coins captured a lot of attention this month, and this is not financial advice, but if you've been wanting to ape in, this could be a good pick to buy a very small bag of once the price retraces significantly, which seems likely to happen over the coming weeks and months. Don't forget that ATB goes live Monday through Friday at 5 p.m. Eastern Standard Time on YouTube, so make sure to tune in. Comment below what you think of This Week in Crypto, and don't forget to like this video and subscribe to the channel. Toodles!